Good morning. Thanks, everybody, for joining us. I'm Perianne Boring. I'm the founder and the CEO of the Digital Chamber. We're a policy organization that is advocating for the crypto industry, and navigating crypto crime has been a massive theme for us for many, many years. I feel like we've been having this conversation forever, so let's jump in. Why don't we just have each of you quickly introduce yourself and your focus at your organizations?
Should I start?
Yes.
Okay, I'll go first. I'm Michael Gröneger. I'm the CEO and founder of Chainalysis. My focus is ensuring that everything works. So I usually say I'm the janitor. But apart from that, of course, spending a lot of time talking to customers, been in this region for the last couple of weeks, and a lot of the customers we have are in the public sector. So we clearly spend a lot of time talking crypto crime all the time.
Hey, Perianne, thank you for having me. My name is Sidhu. I'm the Chief Product Officer at M2. We're a crypto exchange out of Abu Dhabi and headquartered in the Abu Dhabi global markets. My role is as a CPO, is across all our products, from trading to derivatives to cards and lending.
Mauricio Bugelmans. I'm the Chief Legal Officer at OKX, based in California. My primary role is to head up our legal and compliance division, and frankly, support my incredible team to execute on our program.
All right, thank you. So when it comes to crypto crime, I think in the early days, and Michael, I remember when Chainalysis launched, and we were having these conversations 10 years ago, and crypto crime has always just been such a big part of the conversation in crypto. It's kind of like this plague that just follows us around, where there's always been this perception that cryptocurrencies are this massive tool for criminals, and that's really where the conversation started. And I think that's really a big reason why Chainalysis was founded, to help track and trace illicit funds. So, Michael, I'd love just to get your thoughts on how you've seen the conversation evolve over the past 10 years. From my view, we've gone to this massive narrative that's been perpetuated that crypto is this hotbed for illicit activity, but today less than 1% of transactions in the crypto space are illicit. So how has the crypto crime narrative evolved over the past decade?
Yeah, it's a great question. And again, I would say when Chainalysis started, we were probably looking at closer to 10%, if not more, that was illicit activity. One of the prime use cases in the early days, we saw Silk Road, we saw other things. And then crypto started to grow and has been used for so many other use cases than any criminal activity. And if you move forward till today, things have actually changed completely. And one of the reasons for this is really the growth of the industry and the importance of the industry. So we look at today, we have the majority of all transactions on public blockchains are stablecoins. So it's US dollars that are attached to a token and flying around on the blockchains. And that is a great utility, because now we have a lot of those moving around. That also means that if you are a butcher in Turkey, or if you are anyone else, you will actually use stablecoins for something. You will also use them if you're part of a crime syndicate. And that's amazing, because it means that now you have transparency into international crime to a level that's unprecedented. So this is actually an opportunity to solve cases, global cases, that couldn't have been solved otherwise. And I'm saying that, right? And you go out and talk to people and say oh, it's just crime. But our customers, many of them are in the law enforcement space, in the intelligence space, and others, and they're saying the same to me. And they're basically telling this is amazing. So we believe that solving financial crime by looking at the breadcrumbs of the blockchain will be similar to how DNA changed how you solved physical crime on the streets and everything else. And that will be a huge shift. So we basically look at what I like to call crypto, that it's more opportunity and less risk at the same time.
It's your digital DNA. I hadn't actually heard that before.
Yeah.
That's a great way to put it. And from our perspective in working with policymakers, one of the things that we have seen with blockchain analytics tools is when criminals are using this technology, we're able to collect so much more data about how illicit finance is put into practice. So there's a lot more data about where they're sending the money, how they push it around, where it goes, and all that data is data that law enforcement never had before. And so then that can also have a big influence on shaping policy and strengthening policy, and strengthening law enforcement's understand of some of the most egregious criminal actors globally. How about either from either M2 or OKX from the exchange perspective, how have you guys seen the crypto crime narrative change over the years, where you guys are obviously kind of the front door of law enforcement and you're regulated financial institutions, so there is an impetus to protect your customers and to protect the exchange from illicit activity. But I'd love for you guys to talk to that, but also protecting your users from new types of crimes that we're seeing on crypto users.
Yeah, maybe I'll take the first part. I mean, in short, it's becoming more and more sophisticated. So if you look at the way that crypto exchanges have evolved over the years from an infrastructure perspective, first of all, they used to outsource matching engines. Now we build all of it. We used to then outsource custody. More and more exchanges create their own custody solution. But KYT has been something that no one's looked at because it's so complex and so specialized that you rely on firms like Chainalysis, Elliptic, and the others. And I've been a customer of Chainalysis for more than 5 years now across different exchanges. And it's such a specialized niche role because of the level of sophistication out there in terms of washing and pinging it between venues that it's something that I certainly never thought about. Look, we could do this better because you can't, and you have to remain at the cutting edge. And I think regulators kind of trust you to trust them essentially, and that's kind of the key part of this.
Yeah, I think that as an industry, we have to do critical analysis. Our panel is navigating crypto crime, but I think it's also not just defending against it, but also dealing with the policy issues. So one of the primary pieces that we've been looking at is from a regulatory and frankly law enforcement perspective, regulators, law enforcement, they're looking at the numerator, not the denominator. Right? So if it's X amount of crypto fraud that's identified, the fact that it may be a very small percentage relative to the volume that we see is a challenging argument to make to your regulators or to your law enforcement. You need to recognize that they're looking at the numerator, and then you have to study what they're seeing. I'll talk briefly about one of the reports that came out in the US from the FBI, but it kind of as an industry, you've got to understand what law enforcement is seeing because they're reporting that up to the legislators. And that's going to drive policy for our industry, again, based on the numerator, not the denominator. And that's something that we try to understand. And then you ensure that you have a proper program. Obviously from a compliance perspective, a material piece is having the proper risk-based KYC, the transaction monitoring, which Chainalysis has helped for us, but also having a robust law enforcement engagement. And in the industry, right, I'm not speaking for OKX, just my observations, that hasn't always been the case, right? Some of the crypto industry was hesitant to cooperate with law enforcement. That was driven often by customers' expectation that you may not freely disclose their information to a law enforcement agency. So it's an evolving process, but I do think as an industry, it's important for us to understand what they're seeing and what is being reported up to our regulators and what is being reported to the legislators that are setting up or have set up the frameworks in which we operate.
Yeah, I think these are good points. I mean, hopefully we can finally put to bed forever the narrative that crypto is a tool for criminals, given that less than 0.34%, according to your report, of transactions are tracked to illicit activity. But at the end of the day, policymakers, law enforcement are still going to concerns until that number gets to zero, which it will probably never get to zero. And so we also have to engage with law enforcement. We have to engage with policymakers. We have to protect our users in this space. And there's always going to be that role for fighting crime. Michael, chain analysis really has created, one of the, I think, probably most well-read documents in our space on crypto crime. And you guys just updated your annual report. What were some of the most surprising or kind of important findings from 2023?
I think there's a lot of findings from 2023 on the crime side. I think we have seen scams being a huge problem in the industry, and it continues to be. And some of the victims are typically above 60, right? So it's like it's elder scams, and it's something that will be of a concern also from lawmakers and politicians, because when they look at those numbers, it's scary. Sometimes it's you can educate, you can talk to people, you can try to help them, but at the end of the day, what we have tried to do has been to work with a collaboration, public-private sector. We have an example of that in an operation we did called Spincaster, where we were basically able to create a lot of leads and solve these cases in a way smarter way than just letting each report tick in one by one and have an agent look at that one. So I think that's things that's been done there. So that's one concern. The other concern is that we continue to see nation-state actors doing bad things. We see out of Russia, we see ransomware campaigns being written there. It's like clearly a nation-state sanctioned. And we see, for example, in this region out of North Korea, we see huge activities in hacks. And what we saw a few years ago was like DeFi infrastructure that got targeted. And I usually said that like a few years ago, DeFi infrastructure looked very much like Windows 95 in the 90s. So you put it in the internet and immediately it's taken down, because security was not like perfect, it was early, right? And today this has shifted to exchanges, centralized exchanges, because that's kind of where the money is, and that's where they're trying to do that. That can be done in any way from infiltrating staff with North Korean nationals and doing other things. And we see smaller exchanges is at risk, because to have proper security people to prevent hacks like that is hard. So that's another area. One funny thing, it's not funny, it's eerie, but like around like North Korean hacks is that there's a direct correlation between the missile tests from North Korea and how much funding they get out of hacking crypto.
Wow. Yeah, that's a very real issue. And somebody working directly with our policymakers in Washington, D.C. and other jurisdictions around the world, the North Korea piece is very, very real. And that information has percolated to our national leaders. And that in the United States, we had a bill that essentially would effectively ban all of crypto in the United States. This was legislation that was sponsored by Elizabeth Warren. We did a huge campaign this year to try to educate policymakers on why this was not the right approach. And so many of the members who had sponsored this bill, or the senators who had sponsored the bills, it's because of this North Korea piece. They were told that North Korea is using cryptocurrency to fund their efforts. Therefore, we've got to crack down on crypto. Banning it is not going to be a great way to go about it, because we're just going to push the whole thing underground. But we are now in the big leagues. I think that's another piece of the maturation of going from a nascent disruptive industry to really a mature industry that's being integrated in the broader digital economy and financial system. Again, the exchanges are very much on the front lines. So it would be great to hear from both of you about what you see as the most important, whether it's phishing attempts or other types of hacking, how you protect users' funds, and what you think are the most important areas to prioritize when it comes to this.
Yeah, maybe I'll go first. Having been involved in startup exchanges over the last sort of 7 years, it's a very common theme, because first of all, of course, you don't have enough assets for them to make, to be too sophisticated. So you get like let's just say the lower level of attack, which is mostly around DDoS and threats around keeping your site down unless you send us 1 BTC, 5 BTC, that kind of attack, which we see a lot of. And these are costly attacks, hundreds of servers being bounced around. So these are not sort of a university student in his dorm room or something. These are, pretty good groups, but at a much lower level. Then as your exchange matures and you get a bit bigger and your brand goes out, you see it extending and becoming much more sophisticated phishing attacks and much more sophistication around that. Now, the good thing, of course, again, a little bit like KYTs on that side, is there are a lot of firms out there which have really sophisticated technology now, and it's about partnering and using the right software to continuously attack, scan and look for vulnerabilities within your system. But it's a never-ending process, right? Which is why the CSO and the team always have to be on their toes and partner with the latest technologies.
Mauricio, can you talk a little bit about how you guys think about this and what types of systems you have in place to protect user?
Sure, yeah. So, to take a step back, first it's kind of identifying, the major areas of crypto crime, and Michael was talking about what they're seeing, without commenting on what we're seeing, it makes sense. But I think that about 2 weeks ago, the FBI published a report on crypto crime in 2023. And it was somewhat US-centric, but it was actually international. They've got essentially a customer complaint process where they track complaints and losses related to crypto crime. Again, more US-centric, so the numbers would be materially higher if you really look at the ecosystem globally. But a couple of things that we're looking at very closely is, one, investment scams continue to be by far the number one way to steal folks' digital assets. And that, of course, includes the pig butchering and other types of scams in which, the scammers, as we all know, work independently and establish a relationship with our users away from us, of course. The other item that jumped out at us is that the losses number, which they pegged at 5.6 billion for this report, that the number one demographic of victims were individuals over 60 years old. In every jurisdiction, whether it's here in Singapore or the United States or the EU or the Middle East, senior scams against seniors is taken very, very seriously by all of our regulators, as well as it should be, and also by law enforcement. So it's a very startling report that we're looking at, and beyond our own compliance program, which we work with Chainalysis, obviously, but beyond that, I think as an industry, as a large exchange, it's important to work on user education, right? We are not privy to the conversations they're having with these scammers, these affinity scams, or whether it's pig butcher and what have you. But it's really working with your users and giving them the tools to identify when they might be subject to a scam, and also the ability to contact their customer support if they have a question about some interaction that they're having. But it is very challenging because, again, the basis of these scams is their relationship with these entities. Certainly on the back end, I'll repeat it again, working with law enforcement, and that's a material lift for all of us, right? It's a resource-intensive process, but at least for us, we're very committed to it.
Mauricio, you brought up the FBI report now, and I think you make a good point that, again, until we get that number to zero, and the likelihood of it going to zero is very, very low, at the end of the day, policymakers are going to see whether it's pig butchering, ransomware attacks, hacking, phishing attacks, and the fact that a lot of these crimes are focused on people in the older generations. These are people that policymakers obviously want to protect. They're not our most digitally native citizens. What do you think the industry should be doing to inform policy and make sure policymakers aren't just responding with, we should shut this down, but making sure that we can create a regulatory environment that allows for crypto to thrive, but in a safe way?
Yes, so I think on that front, it's kind of, you said it, or alluded to yourself just before, around like, if you shut things down, then it goes underground. And just to walk through what a crypto investigation looks like when you're trying to find out leads, is like if an exchange is hacked or you want to identify funds, one of the best deterrents against crime is that if there's no proceeds. So if you can seize the stolen funds, or if you can seize whatever proceeds are there, that will be a deterrent against doing it. So if you had a world where all the exchanges were banned and everything was happening on the streets, it would be virtually impossible to create a network where you could ask anyone to seize funds. Today, we have a world where, thank God, we have a lot of like regulated exchanges. We have stablecoin issuers that are maybe not regulated, but at least working closely with governments. And that now means that like if you do an investigation, you follow the flow of funds, and you see the funds sit in a wallet that might be a personal wallet based out of Iran or whatever, then you can still seize the funds if it's stablecoins. And that actually happens. And you wouldn't be able to do that if all that happened on crypto was underground. So you actually need these choke points and need centralized services that collaborate. Also, because today the industry is using a similar tool set. So if a hack happens, within minutes after, those funds will be marked as potentially stolen, and that means that they can now be frozen. In a scenario where you made any of these things illegal, it would not happen. So I think that's the story we want to bring to policymakers, and people in law enforcement are saying exactly the same. So it's just a matter of getting the policymakers to listen.
Yeah, so from kind of influencing policymakers, from our observations, I think that the industry has made material efforts to educate them on the technology, and that can be a heavy lift with some of the legislative teams. But I think that this issue of navigating crypto crime has to just assume that they have a similar report to what I just referenced with the FBI on their desk. That's the last thing they've read before they meet with you, right? And so I think it's important to educate them on how we fight crypto crime as an industry. Not only educate them on the compliance around crypto, certainly for the centralized exchanges, but what Chainalysis does and how it works. And emphasize that the blockchain is actually an incredibly strong crime-fighting tool, right? If you're trying to chase down some of these nefarious actors, it's much easier to chase them down on the blockchain than if they were using traditional banking channels. But I think there's a gap in that piece of education that we need to push forward so that they understand the extensive efforts that we're making.
Yeah, I do think the education is important. Michael highlighted, where you do have these choke points, the exchanges, you have the stablecoin issuers where they do have the ability to freeze and potentially seize funds as well. But so much of the future of crypto is DeFi, a peer-to-peer permissionless environment. So how do you guys think about DeFi with respect to protecting the ecosystem against crime?
So I think, again, DeFi, there's many kinds of it, right? But basically, you still at some point often need a service to approach these things. And also think, so my thesis around where the direction of crypto might be a little bit different than a lot of the industry. So I don't believe that we long-term will be our own bank. I don't believe that, because we tried that 200 years ago, and the only way we could be our own bank was to carry a gun at the end of the day. So if we had a world where everyone was walking around with significant funds on them, well, you'll all be subject to like armed robberies on the streets.
Don't you live in Florida?
I do, yeah. But that would be the case, and we don't want that. So it means that institutions will become important. But institutions will use this decentralized technology that we have, and institutions will use DeFi, but they will offer an interface to customers that keeps them safe from keeping their own funds. And that actually becomes the perfect scenario, again, for crime fighting and everything else, because you still get these choke points. I don't like the word, but it's basically the scenario where you have centralized players that will help law enforcement, will find funds that will assist these things. So I'm less concerned about DeFi. I more see that as a huge opportunity to make finance cheaper, simpler, faster, And that will mainly be a technology used by institutions worldwide.
How do you guys think about DeFi?
No, I mean, look, DeFi is to me, I'm a big user of DeFi, but DeFi, I see the same thing as KYC on centralized exchanges. Everyone wants the other person fully verified, but not themselves. And it's impossible to have both, right? So if we were to allow DeFi to flourish, which is a great experiment from product innovation, it kind of has to sit in that sort of bucket of, we'll build tools around it, but we can't actually go reach in there and identify who was doing what. So you can, for example, Tether is really good at freezing illicit funds, even though they're not regulated. And so more and more players who are regulated or unregulated will go towards the same standard. But fundamentally, it's permissionless and anonymous, and that's the beauty of it, and that's the negative of it as well. But now, obviously, around it, you can start wrapping things like sexes can help to seize funds. There is, there's insurance policies now coming out for both CeFi and DeFi. So as the capital markets generally in crypto mature, hopefully there'll be more and more guardrails that will start to protect the kind of the more obvious edge cases around it.
Yeah, I think for the evolution of DeFi when it comes to crypto crime is really understanding what the trends are. And the data set, the chain analysis data set, what it is now, I don't want to speak for you, Michael, but it's incredibly deep. And I think that we'll be able to leverage those kinds of resources to fight against crypto crime on the DeFi side. I am concerned about the perception of DeFi, again, going back to regulators and legislators. So I think for that part of our ecosystem, we do need to kind of double efforts on educating them on what it is, what the centralized players actually do and don't do when it comes to DeFi, and what are the compliance and crypto prevention aspects that we can migrate from DeFi to from CeFi to DeFi. But that's something that again is we've got to get out in front of. And I do believe that that's going to be the next, I think we all know this, where our regulators look next, is to get an understanding of that system and how it is that it operates and what we do as a centralized player within that ecosystem.
Right, and there's a big difference between a centralized entity that has customers and is taking funds on behalf of customers versus an environment
That's
where
correct.
the users are not giving custody of their assets to a third party. And that's like a big part of the line of when you become a regulated financial institution versus a software provider.
Yes, and for those of you who have not taken a chance to look into it, again, not to make it too U.S. focused, but the CFTC several months ago kind of pushed out some guidance on their view of what pushes a DeFi environment to more of a centralized environment. And so I think that's going to be where the battle is, certainly with the regulators and the legislators, to kind of educate them and come to a consensus on what is actually centralized and what's not.
Right. Yeah, it certainly does pose new challenges, but also, a whole new set of innovation that can have many benefits for financial institutions, traditional finance, and the crypto industry as well. Another area of crypto compliance that I'd like to talk about is an area that I'm really proud of, and something that I think more people should be aware of, more users should understand how it works, and policymakers should be understanding the benefit, and that's a proof of reserves. This is something that is unique to crypto exchanges. So these are financial institutions that are taking custody of customer funds and can prove on chain where those assets are. This is not something we can really do in the traditional financial system today. OKX has been one of the global leaders of implementing proof of reserves. Can you talk a little bit about building out proof of reserves, what that process was like, and how this has added more protections for your customers and your investors?
Yeah, so first I should give credit to our product and engineering team at OKX. They do the real work with proof of reserves. But really our view as the proof of reserves initiative was launched, that it's frankly, it was like a no-brainer for us. We were very glad to do it. Our senior business leaders, went out and explained extensively to the industry what we were doing. And so for us, it's been something that is part of our standard approach with our users. It demonstrates true transparency, and we're, it's something that we're committed to, and we are always cognizant of setting the industry standard for our proof of reserves.
Yeah, how does M2 think of proof of reserves?
Yeah, so we'll be coming out with proof of reserves fairly shortly as well. Now, proof of reserves are a massive step forward for the exchanges, but by itself is also somewhat limited. Proof of assets, which are essentially liabilities to customers, their deposits, is a good first step, but it needs to be hand in hand with proof of liabilities from the entity's perspective. For example, I could hold Mauricio and Michael's assets, but I could equally have a off-balance sheet OTC trade as an institution with another counterpart, and no one would know about it. So it is one half of the picture. The asset, or opposite the liability side, and equally from the exchange or institutional perspective, you need to also look at all other assets and liabilities together, and that's obviously through sort of compliant audits using well-respected audit firms, for example. But I think together it's a huge step forward.
Yeah, I completely agree. I mean, you have to have both the assets and the liabilities side to really get that full picture to ensure that you can verify on chain that the assets that the company is saying they have are truly there, and that you can independently verify that. Does anyone have a view on how proof of reserves could be integrated into traditional finance? Is this an area where crypto is leading the way in building more robust compliance systems that build greater tools for users, for customers, investors, and for the regulators? Is this something that you could see integrated into the traditional financial system?
I think so. I think with all things, I think crypto is leading the way here. Bringing it in together in a real-time kind of situation is going to be very, very tricky, the more complex you are, because when you bring in swaps, derivatives, things that are moving second by second, all of a sudden you're not matching assets and liabilities. So I think, proving that you've got the deposits you have in the TradFi, I think the federal, the FDIC probably, guarantees that. Plus, of course, if it isn't there, you're going to prison. So that together will probably make sure that, you have what you say you do from a customer deposit or asset liability perspective. But I think the more complex the organization, the harder this is going to be to do it in any real-time format. Equally, though, I think having an audit and then finding out 18 months or 2 years later about something 2 years ago is meaningless as well. So it's marrying something between the lagging audits versus the real-time proof of reserves is where we need to get to.
I think that would be the challenge for traditional banking, is kind of a real-time proof of reserves. I think they would have to identify what that means in the banking sector, right? A primary model of banking when it comes to customer assets is to actually lend those assets out. And that's why you have those regulatory backstops, which whether it's the FDIC or other banking regulators. So I think before we could do proof of reserves in banking, what that means to them has to be defined first. I think the model of all of your customer assets being verified on chain would be challenging in traditional banking. And so they'll have to figure out, I think consumers would really like it, but they'll have to figure out how to define it, because it's going to have to be a different definition than for a CeFi crypto exchange.
Right. Yeah, I mean, it's a good point. Obviously, it's a completely different business model with the lending as well. But, after the financial crisis of 2008, I moved to DC to work in public policy right after that. And, so much of Dodd-Frank, the Financial Reform Act, was about how do we bring more transparency so this doesn't happen again. And here we are in 2024, and we still don't really have greater access to a lot of that type of data that's really critical for regulators to have so they can address systemic risk. So I think with technology, with blockchain technology, there is a promise to address that. But it's more complex, obviously, than implementing an exchange where customers' assets are backed one-to-one versus where you're rehypothecating in the banking system. Well, let's move forward to talking about working with law enforcement. So much about fighting crypto crime or fighting any type of illicit finance. It's a partnership. It's a public-private partnership between law enforcement and compliance officers or technology partners. Can you guys share, I'd love to hear a story of a successful experience of partnering with law enforcement where you were able to successfully help law enforcement track down criminal activity, which led to apprehension. Maybe Michael, start with you since you have the most experience.
I have a lot of stories of that, right? So over the last 10 years, we've seized, together with the law enforcement partners, more than $12 billion. So those are funds that got basically clawed back to either, if it were criminal proceeds, back to government, or otherwise back to the victims. So it's a huge success. It's not like everything that's been stolen has been clawed back, but basically there are a lot of successes in these stories. I think we have seen, just to mention a few, we saw, for example, in a case with donations to Hamas, where we were able to assist law enforcement with clawing those funds back, and that was like with collaborations with stablecoin providers on that front. So we've seen that as an example. We saw Axie Infinity hack a couple of years ago, a DeFi hack. There was clearly North Korean hackers that were behind that. We have, in that, just shortly after that, we were able to get 10% of the proceeds of the hack back. The rest is still, not all of it, but a huge chunk of it is still sitting on the blockchain waiting to be laundered. But also the fact that it's not moving shows that it's really hard to launder funds today on the blockchain. So if you don't do it the same day you steal them, you might have a very hard time doing it, which is awesome. So again, these are huge amounts of money, so it's like, again, that also makes it much harder, but that's just some of the examples of successes. The final one I want to mention is maybe a case we were deeply involved in called Welcome to Video, which was a child abuse material site, the biggest at that time. We helped together with IRSCI on creating case material and running that case. It was a global case. 23 minors got rescued, and more than 300 people that were buying material and basically asking for kids to be abused, they were arrested and put to jail. So it's, again, you can do this on crypto because you can actually see the flow of funds, you can create international collaborations, and you can make these things happen. That's so much harder in any other payment system.
Any stories you guys are particularly proud of in assisting law enforcement efforts?
I mean, so for us, I mean, it's not really a story as more just an approach. So I think when you're thinking about law enforcement cooperation, you get hundreds of these requests for generally they want wallet information or some sort of user information. But I think what can be very successful is if you have your own internal team and they're obviously conducting investigations on your behalf, and when appropriate, not every time, but when appropriate, is to actually leverage those resources to assist law enforcement in a constructive manner, especially when it comes to blockchain analytics. We deal with law enforcement agencies from all over the world. Some have more resources, some have less. And so I think that would be kind of my story, is to use your discretion, but be open to actually assisting law enforcement in certain situations with actual blockchain analytics and what your investigation was. And that really builds a very strong relationship.
We have time for one more question. So, Sudhu, I'll give you the last word, and I'd love for you just to tackle kind of the future of fighting crypto crime and what you see as the future of crypto crime. Either what do you see as the biggest challenge our community is going to have to face as we move into the next stage of adoption, or what technologies are you excited about that are being currently built and rolled out?
Yeah, I mean, I think from a technology perspective, I know obviously AI is a buzzword, but I think combining sort of machine learning and pattern recognition on top of, KYT tools like Reactor, for example, where, we're still relying on individual compliance officers or surveillance officers trying to, launch Reactor on Chainalysis and looking at all the bouncers. And there's going to be human error. There might be some positive, there could also be negative. And so I think combining that in an automated fashion with a sort of AI thinking around it, it's going to be the huge evolution going forward, especially for tracking. Because right now, Mike, as Michael says, a lot of these hacks are not being laundered because everyone's watching. But years from now, if they get reactivated, how do you track that? How do you follow that? It certainly won't be the same people around at the exchanges. So how do you keep that continuity? I think from a regulatory perspective and from the police and law enforcement, I think getting everyone up to the same level of knowledge is the next big leap forward for us, because in some jurisdictions they're much further along than others, and we can go to there's certain places you can report things you'll never hear back from the regulator or law enforcement, not because they don't care, but I think they're just too embarrassed, or maybe they're just not aware to how to respond. And so I think getting everyone around the world to a certain base level would be the step forward over the next few years, because I think we've establishing ground zero now. The institutions are coming. We now need to build up and take it from a 2 trillion asset class to a 10 trillion and 100 trillion.
Love that.
Yeah.
I think the AI side is a great place to kind of think about what the next frontier is in fighting crimes in crypto. Well, please join me in thanking all of our speakers.
Thank you.